Hello, everyone, and welcome into crushthestreet.com. We got another hard-hitting interview today. I'm trying to put out as many interviews as possible to give people as much coverage as possible on the coronavirus, the markets. I know people want answers. People want to be tuned into opinions that aren't bridled and filtered by the mainstream media, the mainstream mantra, the bias towards everything's fine, everything's okay, or maybe another extreme. But I try to bring on very realistic, level-headed guests on the show to give us some insight on that. And I don't think we will be let down today. My next guest is one of the most level-headed, articulate persons in the alternative media, and someone that we've leaned on for understanding on what is going on around us for years now. I've known him for years. Although I've never met him in person, I consider him a friend. His name's John Rubino of dollarcollapse.com. Support John by visiting his site and staying up to date with the content that he puts out. He's articulated the crack up boom, the blow off top, and here we are. Markets are essentially crashing. The coronavirus has been the pin that's pricking the bubble here, and markets are responding accordingly. And I recommend people, if you want to get more information, A to Z coverage on the coronavirus, visit crushthestreet.com/virus for this information. But without any further ado, John Rubino, thanks for coming on Crush the Street with me today.
Hey, Kenneth. Thanks for having me on.
John, we've seen the Fed act in an emergency fashion, something we haven't seen since 2008, with a 50 basis points rate cut. And this is signifying something very serious in the markets. If you would, give us your initial assessment on what we are seeing right now and how serious this is for our global economy.
Well, as you said, this has been a bubble in search of a pin for a long time, right? And so something came along to pop it, and it was a pandemic. You know, one of those things that falls into the category of natural disaster that you can't predict timing-wise, but you know it's a possibility. You know, we for the past century or so have been creating the conditions in which something like this could easily happen, where we've built these mega cities around the world where there's 25 million people all breathing the same air, and we have globalized the economy so that supply chains go from country to country to country, and just-in-time inventory systems mean that you've got to have components for whatever you're making shipped to you on the day that you're making them, which equates to fragility when something comes along to break the supply chain or whatever. And a pandemic was always a big possibility. And here we are. We got one. You know, we've had some scares in the past, but this is the real deal.
We haven't seen governments respond like we have seen governments respond to the coronavirus. Obviously, with emergency rate cut, the shutting down of conferences left and right, quarantining people on cruise ships. I mean, the response to this is unprecedented. I mean, Italy basically being shut down now. This is not, I mean, and what I'm trying to stress to people is this is not like Zika or Ebola or the measles or SARS, you know, some of these previous pandemics that we've seen. And that's the same type of comparison that everyone that wants to minimize what we're seeing now with the coronavirus is trying to make, but we haven't seen these same reactions. So it leads me to believe that this is more serious than what we're being led on to believe.
Oh, it's vastly more serious. I think governments of the world are leveling with us conceptually. You know, they're saying it's serious, and they're taking steps that are obviously very serious, like locking down 1/4 of China or all of Italy, and as you said, canceling all kinds of things that are very seldom canceled. And the reason for that is that the coronavirus is a lot more contagious than these other things. You know, Ebola Zaire is this brutal disease that kills 90% of the people who get it, but it's not that easy to get it. You have to, get blood in an orifice or something like that from a sick person before you catch it. So it's not the kind of thing that's going to sweep across the world. But this, you breathe on somebody, you touch a doorknob, and then they touch it 15 minutes later, and you sit next to somebody in an airplane, all of these things can transfer this disease um, from person to person. And in a world that's globalized, you've got people traveling all over the world. So one sick person can infect an entire city. They get that. And they're trying to figure out how to deal with it, but they've really been caught flat-footed by this thing, which is moving a lot faster than bureaucracies are able to move in order to counter it. So, yeah, this is a real thing. This is a serious shock to the system. And I'm not an epidemiologist. I don't have any special insight into how this progresses from here. But the financial side of this is pretty clear. This is something at least as serious as the collapse of the subprime mortgage market was back in 2006. And it's leading to a lot of similar action in the markets. People who are around in 2007, 2008 will remember that there was that shock to the system, and then the stock markets got extremely volatile. You had massive down days and then massive up days. It wasn't clear which way the market wanted to go for a while, and then finally it tanked, and it basically took everything down with it, everything else. And so we're seeing that now, where things like gold and silver and the mining stocks tank along with the rest of the stock market, which is counterintuitive in the sense that those are uncorrelated assets. You would maybe expect gold and silver to go up and the mining stocks to go along with them when the rest of the financial markets totally freak out. But that's not the way it's happening. But it is the way it happened in 2008. You had this basically a V bottom, a collapse in precious metals, mining stocks, and precious metals themselves, and then a bounce off the V bottom when governments came in with radically increased monetary ease. And so that's, I think, the real story right now is how are they going to coordinate the next round of monetary experimentation, and how big is it going to be? Because it's got to be huge to stop what's coming. We could see a massive collapse in the stock market here because so many companies are hanging by their fingernails right now because their supply chains have been cut. Their customers are basically out of business. If you're Carnival Cruise Lines, what are you going to do to stay in business? Or if you're United Airlines or something like that, and you see all these pictures of empty airports out there, nobody wants to fly in your planes anymore. There are a lot of industries out there that are threatened with extinction because of this. And if governments want to keep that from turning into a financial contagion that takes down a big part of the global financial system, they only have easy money, and it may be that easy money doesn't work against a pandemic, because those are two very different things. Like what interest rate do you need to get Italians out of their houses and back in the streets to hanging out at cafes and things like that? It's not clear that any interest rate will do that for you. So it's not clear that we have the tools to stop this from going where it's going to go. But the governments of the world have to try, and their only tool is massively easy money. So that's what we're going to see in the next few days, possibly, but definitely the next few weeks or few months, is some kind of a coordinated attack on the debilitated financial system right now, with the idea of revving it back up with super easy money and loan guarantees and negative interest rates. And from an economic nerd standpoint, fascinating times. I'm really finding this interesting. But for basically anybody else in the world, this is absolutely terrifying because it's unpredictable. Your health is at risk. Your job is at risk. Your investment portfolio is at risk. The stability of your government is at risk. And there's nothing you can do about it as an individual. So this is a unique time in human history.
It's really is. I told you before we got on this call here, I feel like I'm in a weird dream seeing all this take place, and the news, it's just so far beyond what I would think a normal day would look like. But here we are. I mean, as we do this interview, and I'm going to try to get this interview out as soon as possible. We're doing it on March 11th, 2020. The Dow Jones at the moment is down 5%. I mean, we're not far off from another circuit breaker trigger. Another 2% down, the markets are going to be triggered for a 15-minute break. And one thing I'd point out to you, John, which is different than some of these other days where we see the markets down this much, is the 10-year bond is actually up 7%. In theory, we're not really seeing a flight to bonds with the sell-off in stocks. So the bond yield It's up 7% right now at 0.8. Uh, what do you make of that?
Well, normally when the stock market is tanking, bond yields go down because people are pulling money out of equities and putting it into treasury bonds, which are perceived to be the safest financial asset. So, I don't know why that's doing what it's doing today, but one thing about markets is they'll do strange things on any given day. So you can't impute too much to one day's action in any asset class. But one thing it could be is that the bond markets are looking ahead a bit to this coordinated monetary ease that has to be coming soon. And they're wondering what that means for the bond market. In other words, if we devalue currencies across the board in some dramatic way, is that inflation? Does that mean bonds are less valuable? Does that mean interest rates should go up? It's not really clear how this plays out, but that could be one thing that's on the minds of bond fund managers, that they're a little bit spooked by what's coming, and they're taking money off the table in the bond market. Who knows? Or it could just be that yields crashed so dramatically over the last couple of weeks that they need a little bit of a respite. Maybe they fell too far for the fundamentals, and who knows? I think volatility is the only thing that we can point to as a certainty in this kind of a market, because we've got an unprecedented situation, a global pandemic in a globalized economy. That's new. And we've got governments with unlimited printing presses, which is also new. And we've got the governments of the world probably right now on a conference call trying to come up with some kind of coordinated thing, which is pretty new. And we don't know what they're going to come up with. We don't know what the effect will be on the market. So, everything is unknowable right now. And I think the safest thing to do is just withdraw from this kind of thing. Don't be trying to call the stock markets over the next week or the next month or whatever, because you can't do that. And don't be taking big chances with other aspects of your financial life. If you can hold some cash, some gold and silver coins, and then maybe a well-chosen piece of real estate that has some functionality for you, that's basically all you really need right now, because those are the only things that are anywhere near guaranteed to hold their value going forward. So this is just one of those times when there's a lot to talk about, but there's very little to say with certainty.
Well put. John, when it comes to precious metals, you alluded to it, talking about gold and silver, and gold not really having its moment yet. Although I would have to point out that we've seen it go through 1400, 1500, and it got through 1600 for a brief moment, overnight on Sunday when it opened up, going into Monday, but pulled back during the week here. Gold and silver haven't really, been this explosive class that a lot of us are expecting them to be, especially in a crisis scenario, that offset to, the financialized assets of the world. And I'd like to get your thoughts on that. And my follow-up to that is silver. I mean, many are asking the question, I know even I am, why isn't silver keeping up on a monetary aspect? I mean, is it more of an industrial metal now than before? And, it getting to 100-to-1 ratio. I mean, what does that tell us about, where it is now? And can we even use it and compare where it was before with its historical ratios to now? I mean, the question is, has its role changed? So let's just take it in two parts. Let's talk about precious metals really not having a massive move higher in general. And then I'd like to move to silver.
Okay. Yeah, you're correct in pointing out that gold has already had a nice run. It's up, 30% in the last year, or 27% maybe today after a little bit of a drop. But that's a nice run. And even if the world was just, best of all possible scenarios, just totally placid, the global financial system functioning normally, et cetera, you would expect a correction in gold after a nice run like that, right? So that that could explain why gold's not taking off. It's already had a good run, and there's profit taking in that market right now. its time will come when the real chaos hits. Uh, in silver's case, yeah, a gold to silver ratio of 100 is just crazy, but it's not hard to understand given the fact that silver is, like you said, an industrial commodity in part. It's monetary and industrial commodity. And if the global economy is going to be shut down, or big parts of it, that's less demand for silver out there in electronics, for instance. And other things being equal, that would put downward pressure on silver's price. At the same time, silver is a monetary metal, and you're seeing big demand out there from a lot of the mints who make 1 ounce silver coins. Those things are flying off the shelves right now. So you're seeing two competing forces in the silver market right now. But if history is still any kind of a guide at all, the gold to silver ratio implies that silver is going to be okay going forward, because the way these cycles usually work is that the gold and silver ratio gets up in the 80s and 90s, and then gold starts to go up, silver lags for a while, and then when it's clear gold is going to continue to go up, silver catches back up, and the gold to silver ratio goes down to 40 or 30 or 20. We should see that again. But again, it all comes back to the monetary policy that's going to be put in place when governments finally figure out that they've got to do something extreme and talk to each other and figure out what that extreme thing should be, because there are a lot of different choices. But we can say with certainty that it's going to be a big deal. It has to be a big deal, because if they do something that's not a big deal, the markets will treat it the way they treated that Fed emergency 50 basis point Fed funds rate cut, right? They'll go, if that's all you got, we're going to sell everything in sight. So the monetary authorities know that. So they're not going to come out with some wimpy thing, or maybe they don't know it and they do come out with some wimpy thing, but the markets will slap them in the face right away if they do that. And they'll have to go back to the drawing board, schedule another global conference call, and come up with something more serious. So more than likely what happens is that you get big increases in deficit spending by the major governments, at the same time that you get lower interest rates and big new QE programs from central banks. This time around, I think equities are going to be in the mix. Janet Yellen, when she was the Fed chair, was on record as saying, I wish we could buy stocks, because there's a more direct connection between consumer behavior and stock prices than between consumer behavior and bond prices. So she wanted something that had a direct impact on the economy. And stocks, via the wealth effect, have that. So if the Fed comes in and pushes the S&P 500 up by 10%, with basically unlimited electronic printing press money, the theory is that would get people excited. They would go out and buy a new car or a vacation or whatever. I think that's not a guarantee, but that's the theory they're working on. That if they can find a financial asset that is directly correlated with human behavior, they can manipulate human behavior. We'll see. I mean, they're going to try it. We'll see if it works. There's no way to know ahead of time.
John, I'm so blown away by watching the markets, and I'm not blown away, but it's odd when you actually see it happen. And the markets are so wanting to hear how much the government's going to intervene, how much stimulus, how much of a tax cut, what Trump's going to do to inject and provide some liquidity for these markets. And just the hint of him not doing something is causing the markets to go down. The hint of him stepping in causes it to go up. It's just so odd to me watching the fragility of this market being dependent on this drug of free money. It's nothing fundamental. It's just how much the government is going to intervene. And I guess the question is, can the governments paper over this new crisis? I mean, I know instinctually I want to say they can't. This is probably the straw that breaks the camel's back, but we've seen them attempt to do that time and time again with some level of success. Now, I'd argue that we're getting to the end of this Ponzi scheme, where we need more and more capital to keep the status quo going. But those are the questions, right? That's why you're telling people don't try to predict the stock market. I know that, but just to, draw some thoughts out of you. I mean, do you have any ideas on this?
Um, uh, Ideas on what, Kenneth? I'm sorry.
So when it comes to government papering over our current
Uh,
situation, any chance that they can do it? I mean, nobody was expecting this black swan to come into our situation here and cause this financial mess. I think even a lot of us were just expecting some sort of unemployment situation to trigger a financial crisis, a banking crisis, but not a virus. I was not planning on a virus.
well, it could have been any number of things. It could have been a financial thing, like in the previous cycle, or it could have been that Cat 5 hurricane finally hitting Miami and causing $2 trillion worth of damage, or the California earthquake. There were lots of natural disaster kinds of
Those
things.
would even be less worse. Those would, I mean, it wouldn't have been as
Maybe,
bad because they would have been isolated. This is a global pandemic. I mean,
yeah.
whole Italy shut down.
But that was always out there as a possibility too. And we kept getting these scares where it was SARS one year and Ebola the next year, and they never came of anything. But nothing ever came of them. But um, now we've got something where that's the real deal. This is a real global crisis. But this bubble was going to be popped by something. It could have been anything. We could have gotten up some Monday morning and found out that Deutsche Bank's derivatives book had blown up, and the German economy was circling the drain. Things like that were always out there waiting to happen. So this is the thing that ended up happening, the coronavirus. But since there was always going to be something, we shouldn't be that surprised. I mean, this was a low probability thing in the moment, but it was a high probability thing over the next 50 years or so. So this thing was always going to happen at some point, and it just happened to happen now. So the question then becomes, what do governments do about it? What does it mean for the financial markets? What does it mean for the global economy? And that's where things get really interesting, because we don't, as you said, if Miami got wiped out by a hurricane, we would kind of know what that means, right? But we don't really know how far this goes in terms of the pandemic, and what it means and how long we're shut down. I live not far from Seattle, and stuff is being canceled there, and people are being told to work from home, and there's no real way to know how long that lasts and what the impact on economic growth is, but it's going to be pretty serious. So this is a big deal, and it's made much, much bigger by the fact that we've taken on so much debt over the last 30 years that we're incredibly financially fragile. It wouldn't take much to tip the global financial system over into another Great Depression or a Weimar Germany style hyperinflation. So we've created the conditions in which we're very, very vulnerable. And now something has come along to expose our vulnerability. And we'll see how the financial system holds up. But, if you look around the world, there are air pockets under the prices of a lot of blue chip equities and trophy real estate and government bonds. Apple could lose half its value and still be a completely viable company, right? It could be a fairly priced stock at 2/3 less than today by a lot of valuation measures. So there's no real stopping point underneath financial asset prices if a bear market really gets going, unless governments step in and just start buying them at a given price. The Japanese government, for a while there, I'm not sure if they're still doing it, but for a while there, they were buying 10-year Japanese government bonds at a yield. In other words, they were saying, we'll buy as many bonds as you want to sell us at 0% yield. It wouldn't be a surprise to see the central banks of the world step in with equities and say the same thing. We'll buy Google at $1,000 a share. give us all of it if you want. And again, it's not clear what that means for the financial markets. We don't know if this pulls us out or if it craters the currency market. See, the dollarcollapse.com endgame has always been that a financial crisis comes along because of all the debt we've taken on that is so unmanageable that central banks and central governments end up having to bail everybody out in sight. And the bill for that, or in other words, the amount of currency that has to be created to make that happen, increases the supply of currency to the point where each individual piece of currency becomes less and less valuable and starts to fall at an accelerating rate, and until people just bail on that whole part of the financial system. Now, this really has the makings for something like that. Because let's say, last time around, if it took $10 trillion to pull us out of the Great Recession, this time around, the number is very open-ended, but it could be a lot bigger. So say we need to increase the global money supply by $25 trillion. What does that mean for the value of each individual euro and yen and dollar? I can't know. But basic economics 101, supply and demand, kind of says that it lowers the value of those currencies. And if that gets out of hand, then governments have no tools left, because they can't issue a lot of new currency if nobody wants the currency. So they can't bail us out of a currency crisis. And that's really the scary thing, is that it becomes clear that we have no tools left. This thing is headed south in a hurry, and there's nothing left for us to do. So the loss of confidence in the system will be epic when that happens. And, we've been creating the conditions for that to happen by borrowing all this money year after year after year. So this might be the time it happens. We might have a whole other new cycle after this to buy some time in which to borrow more money. There's no way to know. But I think that we've certainly created the conditions in which this could be the end for the fractional reserve banking, fiat currency, unlimited government spending, and deficits system that we've created. So if this is the end, then that's a whole different story from previous bubbles which then burst. You have to approach it in a completely different way, because it's not just the reflation of a new bubble that we're going to be looking at out there. It's the rebuilding of a completely new financial system on sustainable grounds. And that's going to be an interesting debate. We should be boning up on the Austrian School of Economics and Monetary History in order to have that argument when the time comes. Because a lot of people are going to be saying, well, this was a failure of capitalism, so we need to go to some kind of authoritarian setup and control individual freedom rather than let it run, and that would be a shame. I would much rather see us go back to the original constitutional principles of individual freedom and limited government. But that's not a done deal. That's not a given that that's where we go when all this happens.
John, you do a good job of being apolitical, not getting too far one way or another with our two-party system. And my question to you is, given the current circumstances, though, does this get blamed on Trump? I mean, I going into this, if the stock market kept going, I think Trump would have had pretty smooth sailing against the Democrats. And honestly, if this would have happened sooner, I almost feel like Bernie Sanders would have had a better chance. But given what we've seen in, mini Super Tuesday last week, and the Democrats just coalescing behind Joe Biden, and that's a whole other issue with him losing his mind in so many ways. But, I have my opinions on why they're supporting him. He's kind of the conventional mainstream yes man candidate for the Democratic Party, and Bernie Sanders would be kind of a little more difficult to deal with, but very extreme. What are your thoughts? Do you think Trump has a chance to win this election, given the whole situation that he's dealing with right now is blowing up in his face?
Okay, to take a couple of steps back and then deal with current politics. It's important to understand that when you screw up your finances, you inevitably screw up your politics too. Because if you borrow way too much money, which is what we have done over the past 30 or 40 years, you lose the ability to take care of big chunks of the electorate, and they get frustrated. And what we've seen in the US over the past couple of decades for sure is massive and increasing wealth inequality, which is due to the government's attempts to manage its excessive debt. By pushing interest rates down further and further year after year, we've enriched the rich and impoverished the poor. So in that sense, Donald Trump and Bernie Sanders should be seen as symptoms of a political sickness out there. Not that they're in any way sick individually, but the fact that they, as outsiders, were able to do as well in elections as they've done shows that a big chunk of the citizenry in the U.S. is willing to try outside the box thinking because the establishment has failed them. So it would have been completely reasonable to see a Donald Trump, Bernie Sanders election this time around, in which the mainstream of the two major parties are on the sidelines watching this thing. And I'm sorry that it isn't Bernie Sanders versus Donald Trump from a theatrical standpoint, because that would be fun to watch. Man, those two guys going at it with zero fear and zero filter would just have been a blast. Now, the fact that the Democrat establishment was able to hand this thing to Biden means that we kind of are doing a replay, right, of the Hillary Clinton Donald Trump election, in which you've got quintessential establishment ideas up against revolutionary ideas. And yes, it would have been way easier for Trump if he was going into the general election with a rocking stock market and a growing economy, but that's not how it works normally. You don't get to choose the business cycle if you're the president. And he would have gotten credit for what was going on, and he will get the blame for what's going on, because that's also how it works. If you're in charge, whatever happens is something you have to own. So this is going to increase difficulties for Trump. But he also could make the case that this certainly wasn't his fault. This had nothing to do with his policies. It's just something that came out of nowhere. And he should be judged on how he handles it rather than what it does to the economy in the short run. That's a reasonable political point of view. And I think that's what he's got to say now. Listen, it would be way worse if Hillary was president, because look how I'm handling this. That's got to be his platform. And Biden, who might be senile, there are serious questions about Biden's mental acuity right now, is kind of a time bomb waiting to go off. So these debates are going to be kind of painful, possibly, to watch, and possibly determinant in this election, because if Biden handles himself and he's able to run against the economy under Trump right now, then he's got a good shot. But if he starts saying non sequitur after profanity after blatant lie, like he's been doing on the campaign trail so far, then it could be that it just takes one debate and Trump wins 60-40. Who knows? But those are all real possibilities.
Yeah, I would agree with you. And this is my mind just going down the rabbit hole with the coronavirus. The coronavirus is rough on Trump. I think already people are frustrated the way he's been responding to it. They want him to come out and just buy up the stock market and really pump this thing full of loose monetary policy. And they haven't really done that yet. They've been slow on the testing side. So in theory, the U.S. could be a lot more infected than what we're being led to believe if people aren't being tested and people don't know if they have the virus or not. So in theory, there could be a lot more infection out there than we know about yet. And then the economic consequences that he's dealing with this. And going into this election, his rallies are his biggest thing, the biggest strong point he has going for him. And how are they going to be able to do rallies with coronavirus? I mean, gatherings of 100 people are starting to get canceled, right? And so if you take the rallies out, and Biden doesn't have to get it up in front of people, it's all media. The media can edit his gaffes and make him look a lot better than he really is. Trump doesn't get to do what he does well. I think he's got a hard time beating Biden in this current environment, potentially. So that's just kind of my instinct about this going forward, because up until now, I would have said Trump is going to win in a landslide.
Yeah, well, you're right. There's a real surreal aspect to so much of this. They're already talking about NBA basketball games just being played in the gym with no audience. And the next Democratic debate is going to be on a stage with no audience. And that's now, that's before the coronavirus really has a chance to spread. So, yeah, it's possible you can't have a 30,000 person political rally in the coming election. and these guys are going to they'll debate, and we'll see the whole debate, but there will be no crowd action or anything. Which, the crowd action is half the fun in a Donald Trump debate, and it would have been just hilarious with half the audience being Bernie Sanders backers and half being Trump backers. Oh man, we missed one of the most theatrical political things that would have ever happened, by not nominating Bernie Sanders. I'm really
why
sorry
are you
about this.
downplaying the theatrics of a Biden-Trump debate?
Because the Biden-Trump thing might be sad. It might be kind of elder abuse if Trump just starts picking on him for his lapse of
He's got
memory
the
lapses.
Hunter Biden thing though to go after.
And his corrupt family. I mean, Trump is going to have a ball with this. He's going to be like, "Oh, how's your rich son doing, Joe? How's he spending that $80,000 a month? I don't even know if I could spend $80,000. He's just going to have a blast with that. And I don't think Trump or Biden is going to have much of a comeback. But see that to me is way less interesting, watching one guy beat up another guy, than watching a heavyweight championship bout, which is what Bernie Sanders versus Donald Trump would have been, because Sanders has no fear of Trump, and he has a coherent political philosophy that he can contrast with what Donald Trump is doing, and that would have been very interesting, because Trump would have had plenty of ammo against Bernie Sanders. Communism, really, Bernie? You had your honeymoon in the Soviet Union, is that correct? So he would have had
Bernie
plenty
Sanders
of ammo
owns
too.
it though. I mean, to be fair, he does not. He argues it, and if you don't, read between the lines, he could digest it and almost feel good about what he's saying. Biden will argue that he believes in capitalism, and on one side, and then on the other side, want to, increase government intervention in many things, and obviously Trump does the same thing on other sides of the coins. So
see the Biden-Trump debate is between globalization versus a return to nationalism. In other words, bringing the factories back home, and that works in Trump's favor now. Economy that helps everybody. That wouldn't 4 years ago. Free trade was already on the way out during the Trump-Clinton election, and now, Jesus, the idea of free trade and globalization being your policy going forward is kind of terrifying. It's something that is just wrong for the times. So, it'll still be an interesting debate, but it'll be a different kind of debate, and one that I think is way less interesting than Sanders-Trump. But it could still be interesting, because if Biden is able to articulate his ideas, he will make the case for free trade, for globalization, for letting the big banks off the hook for their crimes, and et cetera, et cetera. He's going to own the Clinton-Obama worldview, and I don't know. I don't know how that'll sell this time around. It might be reassuring as, okay, we're going to return to normalcy after 4 years of this crazy person. Maybe that works. I don't know. And so much depends on the economy. Nothing is certain out there. There are a million different ways this could go. It all leads to a gigantic currency reset out there. But the roads leading to that currency reset are windy and myriad. There's lots of different ways to get from here to there, and there's no way to know what road we're going to end up choosing.
10-year bond now down 2%. It was up 7%. Middle of our interview, down 2%. John Rubino.
Interest rates are going up, you're saying today.
10-year bond yield.
Oh, the yield. Okay.
It's
okay.
down.
So the yield is down.
It was up while we were doing our interview, and I was expecting, people to be piling in and yield should be dropping, and while we were in the middle of the interview, within 30 minutes, we saw it go back, revert. So interesting times, John.
Well, one more week, like the last couple of weeks, and we will be in negative interest rate territory across almost the entire treasury yield curve. And that's astounding considering where we were, a month or two ago. We had the 30-year bond was over 2%. Now it could easily, if things get a little bit more crazy, drop below zero. Amazing how fast it happened.
John Rubino, everyone of dollarcollapse.com. John, thank you so much for coming on Crush the Street. Again, you're a friend, and I appreciate your insight and for being an authority and a thought leader in unbridled, unfiltered truth news. So thank you so much.
Thanks, Kenneth. See ya.